Good morning, ladies and gentlemen, and welcome to the show on this February the 2nd, 2023, a Thursday. Thank you for tuning in. I'm glad to have you guys here. First thing I want to talk about is last night here in Nova Scotia, Canada, it got down to as cold as I've ever seen it before, which is minus 20 degrees Celsius, which is in Fahrenheit is sub-zero Fahrenheit. And it's got that cold here before. And I've been here for 30 years. And I've seen it that cold before a few times. I can count on one hand how many times I've seen it that cold. But tomorrow night, or Friday night, we're going to get temperatures I've never seen before here. About 10 degrees colder than the coldest I've ever seen before. And so I'm a little bit apprehensive because I've never experienced that cold, and they say there's going to be a strong wind with it. I don't know, man. That's going to be cold. I just hope my power doesn't go out. Anyway, but we're all dealing with problems like this that we didn't used to deal with. Weather phenomenon like we've never seen before. We've all seen it. Whether it's a thunderstorm that you've never seen anything like it, lightning like you've never seen before, hailstorms, ice, just weird weather phenomenon that we've been dealing with since around when our world started to change in 2020. In 2020, things started to fall to pieces when COVID came along. And things have not been the same. If you guys all know what I'm talking about. They call this the new normal, but the new normal is abnormal. And so, anyway, listen, guys, I'm going to get in. I'm going to talk about what the Feds, they had raised the basis points, 25 basis points again. They raised. So they're still in this tightening cycle, and they're still withdrawing $95 billion a month of liquidity out of the system. This is the quickest, most rapid liquidity drying up event that we've ever experienced. I think it's 5% of the overall liquidity's dried up just in the last few months. That's extremely rapid. Too rapid for the system to handle. And so, we're getting mixed signals from the Fed. I'm going to read the highlights of this article right here. The Fed is easing up, is the Fed easing up on their inflation fight? It says the mainstream narrative is that the inflation has peaked and that the central bank is now easing the foot off the accelerator. So that's the mainstream narrative. It says, on the other hand, Powell also gave himself some wiggle room, saying that he does see inflation easing. So in other words, he's given himself an out, Powell is right now. It says all of this indicates that the initial market take was that the Fed is nearly finished raising rates. I kind of tend to think they are. I think something's going to happen. I just get this feeling from looking at the markets and studying the charts, and which I do I spend for the last, I don't know, I'm going to say 6 or 7 years, I've studied the charts. I study the charts daily, on a daily basis, and I mean 7 days a week. I'm in there looking at charts and looking at information, at geopolitical information, and to get the overall picture. I put a lot of work into it, getting the overall picture of what the economy is doing and what things are, what's the progress. And, you have to figure the geopolitical in to the equation. If you don't, then if you're just a chart studier and you don't study the geopolitical situation, then you don't see what's happening right now behind the scenes with this trade war that's morphed into a war between East and West, and nothing less than they're trying to destroy our financial system. I think this is their main target, to tell you the truth. Not Ukraine. I think the main target is our financial system. And the Fed, Oh my goodness, I don't even want to get into this. But okay, it says all of this indicates that the initial market take was the Fed is nearly finished raising rates. The Fed is essentially speaking out of both sides of their mouth. So they're not being clear with the markets. The Fed is. They're being coy with the markets, and they're not being clear in their presentation of just exactly what they're going to do. So the markets are trying to discern. And it says the Fed's speaking out of both sides of their mouth. It says the disinflation that Powell mentions is transitory. And yes, I believe it is. There is a little bit of disinflation. If you guys don't know what disinflation is, it means a weakening of the amount of inflation. It's not deflation. It's disinflation. You can have profoundly high inflation and have disinflation. Say the inflation rate is at 15%, and say it goes down to 13% for no apparent reason. That's disinflation. It says inflation is caused by the government, he said. It is caused by the Federal Reserve printing money and Congress spending it. Peter said he believes we are heading toward a major economic downturn, but even that won't slay the inflation dragon. And it says, I am convinced something will break in the economy. And I'm going to have to agree with that. I'm totally convinced something's going to break. I don't know what it is, but they just can't keep draining 90. See, this is the money. This is a Ponzi scheme, guys. And, you know, Ponzi schemes always rely upon the greater fool. In other words, somebody is going to come along and buy something off of you at a higher price. They always rely on new, fresh money coming in. You cannot cut off the money supply to a Ponzi scheme, or it disintegrates and it blows up. And this is basically what the Fed's trying to do. They're trying to taper a Ponzi scheme. You can't do it. You can't do that. He says, my pessimism is rooted in the fact that the U.S. economy is addicted to easy money. It's addicted to artificial low interest rates and quantitative easing. You can't take an addict's drug away without sending him into withdrawal. The economy can only limp along for so long with tighter monetary policy. Powell and company, in other words the Federal Reserve, have backed themselves into a corner, and they just don't know it yet. Or more likely, they haven't admitted it. So there you go. Something's going to break in the system. And that's what happened in 2008, you know. We already see signs of something very similar to 2008. The used car market and the car market in general is rolling over right now. And so is the housing market. And things are only getting tighter, you know. And the American consumer is tapped out right now. And they're out of money, and they've got an incredibly large debt that they've just recently put on their credit cards. A lot of them have reached their credit card limit, and they don't know how they're going to pay it. What can I say? We got one sector of the economy right now that's actually deflating, and that's in the real economy. Let's take a look at the silver price today and see what it's doing. 23.80. It's up. It's down 15 cents in the day so far, but you know, it's just like been the stock markets lately. It's like you can go along month after month, and it's like they're not going anywhere. They go up and they go down. They go up and they go down, but lately this has been the trend. Is they always end up right back where they started again. And so silver has been running around $23, $24, and you might see a big drop of $1. And then 2 or 3 days later, it's right back up where it started again. It's been doing that lately. We've been in this set range in all the markets. You know, I mean, take the Dow for instance. You know, it's been setting in this range. Cryptocurrency today, we're looking at 23,852. The only thing we've seen that's progressed upwards, and I mean, it was around 16,000 was cryptos. for Bitcoin was around 16, 17,000. It stayed there for quite a while. Now it's popped up to 23,800 right now. Ethereum is at 1678. You might ask the question, is the bull market over? I mean bear market in cryptos. Is it over? Is the bear market in cryptos over? And that's a big question. And it's always the same question, you know, that people ask in the near the bottom of a market. They always ask, is the bear market over? Should I buy in right now? They always ask this question because they've seen it trending downwards for so long, and they're like, what if I buy in, and what if it takes another drop down and tests bottom again? And they're like, what should I do? You know what I mean? And this is where we're sitting with the cryptos right now. It's this big question mark. Is it going to drop back down to 16,000 again? Or even lower? 14,000, 12,000? Or is it just beginning its next bull market? And we all know what Bitcoin does in a bull market. So I would say, because I don't know the answer to this question. I wish I could tell you guys the answer to this question. I don't know. I would say you have to look at the downside potential and the upside potential and the downside risk and weigh the two. The upside potential on Bitcoin right now, it's touched 68,000 last time. Okay, let's look at the last two big runs. The one before last time went up to 20,000. And then it went down and bottomed out, what, around 3,500 or something? And then it went all the way up to 68,000. And then it bottomed out. So far, what we can say is the bottom is around, so what, 16,000? So what would the top be in another bull run to be in equal line? Well, it'd be somewhere over 100,000 would be the top if you had another similar from the last two we've had. We see 20,000 was the top, then we saw 68,000 was the top. So what would the top be this time if you were doing a chart? You know, it'd be over 100,000. So let's just say in our heads the upside potential is somewhere over 100,000. What's the downside risk? Well, we saw 16,000. You think it could make it to 14? Maybe. 12? Yeah. Could. 10? Below 10? Oh, that'd be getting pretty difficult. Let's just say 7,000 is your downside risk. I mean, let's be really bearish. Let's say it could go down to $7,000. So what would you be risking if you bought in at 23,000 and it went down to 7,000? Well, quite a little bit. Say you bought one Bitcoin, you know, 17. So you're risking $16,000. That's what your risk would be on the table. You'd lose potentially, if it went down to 7,000, you could lose $16,000. You bought at 24,000. You know, around that. But weigh that against your upside potential of over 100,000. Well, you'd stand to make over $75,000. So on one side you got your downside risk, you could lose 16,000, and on the other side your upside potential, you could gain 75,000. That's just math, guys. I mean, okay, I got into this, you know, but I'm just like saying, you know, I mean, this is how investors work. This is how it works. You weigh your downside risk against your upside potential, and then the next thing you have to do is you have to sit there and ask yourself, what way do I think it's really going to go? What do I really believe? Do I believe it's going to go down to 7,000 from here? What's the odds of that doing that? And what's the odds of it going up over 100,000? And then start to think, well, which one do I really believe it's going to do? And that's how you figure out the whole thing, you know. You figure it out that way, you know. You figure out the bottom line, it's your money. And nobody wants to lose money. Everybody wants to gain money. You know, and this is how your mind should start to work on things like that. You know what I mean? You say to yourself, anyway, I'm just rambling on a little bit here, but anyway, let's take a look at crypto. Let's take a look at the Dow Jones today. 34,005. It's down 87 points. It's been ranging around this. It hasn't went anywhere in ages. Seriously. Just hanging around that 34,000, you know what I mean, for ages now. What can I say? 34,005 is down 87 points. Let's take a look at now we see the S&P's up today. It's up over a percentage point. It's up 61 points at 4180. Okay, so let's take a look now at crude oil. Crude oil is 75.73. It's down 68 cents. So crude oil is getting a little bit cheaper right now. You know, if some sort of we come some close, Iran got attacked, you know, and come some close to having some sort of an oil war. Can you imagine if an oil war were to start, or some sort of war over in the Middle East, what the price of oil could go to? Can we say $200 a barrel? And can we say $10 at the pump? Anyway, yeah, I shouldn't laugh about that. That would just be so sad. You know? And there could actually be, they could actually put in some sort of thing where you can't buy more than a certain amount. They did that during World War II. They had little stamps that they would send you, and you had to, they were called gas rationing stamps. Food, too. Things like sugar. You wanted to bake a pie, you couldn't get any sugar. Or if you were rationed, like, you know, that's rationing. That's what happened during World War II. Anyway, bonds and rates today, we're looking at falling yields. 3.34 on the U.S. 10-year. You know, we've seen substantial, starting to drop. The long end of the yield curve starting to drop. We're looking at 3.34 on the 10-year and the 30 years at 3.5. Keeping my eye on these bonds and these bond yields. You know. Anyway, listen, guys. Thank you for listening to my show. Like and subscribe. And we'll catch you guys in the next episode. You guys have a great afternoon. Bye-bye.